Hey everybody, it's Ken McElroy here. So thank you guys so much for the suggestions and the comments that you guys are giving on this YouTube and at kenmcelroy.com. It's so helpful as I create the next video just for you guys. As you guys know, I do this based on what's happening at the moment. So what I've been getting a lot of is what am I investing in? What are my friends investing in? And where are we directing our investors? As you guys know, we have thousands of investors and we have over $1 billion worth of real estate right now. Okay, and that's in lots of different categories. And so we are always talking about, what are the winners and what are the losers right now based on this 2020 recession, and where are we investing right now? And there's a lot of signs out there, and I think that you guys can learn a lot from just taking a look at what's happening right now. Okay, so the first thing is, there is some debate still, I don't know why, of are we in a recession or not in a recession? I'm here to tell you that the definition of a recession is 2 or more consecutive quarters in decline as reflected in the GDP or gross domestic product. Now, the reason why people say that we're not in a recession yet is because we actually don't have the numbers yet of the GDP. But the truth is, guys, we are in massive decline, as you all know. Unemployment's all-time highs. The businesses are closed. People are in real trauma. A lot of people aren't working, and we're pouring all this stimulus money in. So the question is, how do you figure out what's happening now and make the best decisions going forward? And the best way to do it is look at history. And so if you go back into 2008 and even before that, you can see that we've had all kinds of recessions. I think there were 13 recessions since the 70s. So, you can go and you can take a look, like what happened to this, what happened to housing, what happened to retail, what happened with bank spending, what happened with consumer savings, and all those kinds of things are all in there. And you can try to get some semblance of exactly where we are today and what we can do. And so that's what I'm going to try to do today in this video for you. So the question everybody really has is, are we in a recession, or are we really going into a depression? And how would that affect housing, okay? Because that's real estate, and that's what we're talking about. That's not all of real estate, however, because we're not, we got industrial, we got office, we got, mall and retail and all those kinds of things. So the reality is that's the big question. Are we heading into a depression, or is this a V or a U? And I've already talked about that. Some people think it's a W, some think it's a long U. I'm not here to debate that. Here's what I know. I know that there's a lot of people, they're out of work, and a lot of them are going to go back to work, but there's a lot that aren't, okay? And that's going to affect a lot of things. And so all I'm trying to do is show you what happens in a recession. And the easiest definition of a recession that I could find is this, and I love this. In as few words as possible, a recession is caused by a sustained lack of consumer demand. Okay. Now, that can happen a lot of ways, okay? How to fix it? If a recession is simply the lack of demand, then the solution is equally as straightforward: increase the demand. Hey guys, let me just jump in here. If you find this information helpful, just hit the thumbs up below the video so that other people might enjoy this video as well. And don't forget to go to kenmcelroy.com, where we have lots of videos and forms and things like that. And if you sign up, I actually do a private Facebook live video where I do Q&A for people that send their questions in every single week. All right, so here we are. We have over 40 million people file for unemployment. And these 40 million people are wondering, are they going to go back to work or not going to go back to work? And there's all kinds of scenarios, and I'm not going to get into that. I've already talked about what I think are going to be the percentages. I think there's going to be somewhere between 30 and 40% of the people that are not going to actually go back to work. So that's a very big number, call it 10 million, 12 million, 15 million, whatever you want, 18, 20 million. There's going to be a number of people that don't go back to work. And so when we're looking at recessions, there's a big debate over, is this a demand or a supply side recession? And so what are the policies around there? And it's interesting because these are what everybody's talking about right now. This mortgage help right here, job creation, benefits, and these are kind of both sides of the equation. But here's the interesting thing. We are definitely in a situation where there's lack of consumer demand. That is for sure. And the reason we have lack of demand, just like I showed you guys here, the reason that there's lack of demand is because people are concerned. They're home, they're getting stimulus money, they're using their savings, they're not sure what their future is. There's uncertainty and fear and all those kinds of things. And so there definitely right now, guys, is lack of consumer demand right now. So let's take a look at, if we know that there's lack of consumer demand creates recessions, and right now that is because people don't know whether they're going back to work. What we can do is we can start to take a look at things like the household savings rates right now for people. All right, now this is a very good thing because as you guys know, in a prior video that I talked about, I said cash is king. And this is exactly what's happening. We're seeing these savings rate. This was March and this is April, and savings rates went from 12.7 to 33%. Okay, that is a very, very, very good thing. But the reason it's so high is because people are hoarding cash because they're unsure of their futures. So here's what's happening. This is a low consumer demand. That's what that is. People are hoarding their cash, which means that they're not spending, okay? So right now, as retailers open and restaurants open and hotels open, people are sitting over here in cash and they're going, you know what? I don't know whether or not I'm going to go back to work or not, or maybe they are and their salaries are going to get reduced. You know, we're hearing that. There's all kinds of things happening right now. So what's happening is people are very wisely holding on to cash. That creates a dip in consumer demand. And as you guys know, that's exactly the reason why we're going to have a recession. And what's going to fix it is an increase in demand right there. So the purpose of this video is to walk you guys through some of the things that we're looking at on the demand side, knowing all of this. And what we're trying to do is we're trying to invest our money wisely. And so with regard to real estate, what is still in demand? That's really the question that we all want to know. And that is actually where we should be investing. So I've broken down a few things for you, and let me just walk you through this. The first thing that's going to happen in 2020, the winners, in my opinion, are going to be anything that's digital and anything that's e-commerce. Because people, those don't necessarily rely completely on jobs. A recession speeds up trends that were already in motion. So we're seeing a digital revolution. We were already seeing e-commerce with the rise of Amazon and Target and Lowe's and Home Depot, and all these people competing for us while we're sitting home and gathering our goods instead of going out like we used to, okay? So the behavior was already there, and all the recession did was accelerate that. It also accelerated some of the bad trends, and we're gonna go over those in a second. But that's what all recessions do. It basically speeds all this stuff up. So now let's talk about what I think are gonna be the winners for 2020. I think it's going to be in data centers. I think it's going to be in industrial and logistics. I actually think it's going to be in cell towers. And I actually think it's going to be in manufacturing. And so let me walk through each of those so you guys know exactly what I'm talking about. So with regard to data centers, this is just this week. So these are data centers that are trading this week alone. A Texas company and Microsoft are fighting over a San Antonio data center right here. This is one that happens to be in Phoenix, a 1 million square foot data center. And then there's another one in Colorado for H5 data centers. Okay, so these data centers are real estate. It's actually data storage. And these are popping up all over the country. And this is one really, really, really hot market right now. And it is not going away, folks. And I'm telling you, it's an area that you should be considering. Another one is on industrial. So let's talk about that. So here's an interesting story that I got from CBRE, which used to be Coldwell Banker Real Estate. And it says that the e-commerce supply chain requires up to 3 times more warehouse and logistics space But a recent study found that for every $1 billion of growth in e-commerce, an additional 1.5 million square feet of distribution space is needed. So I don't know if you guys are plugged into this, but all over the country, Amazon's buying these massive industrial warehouses, okay? As are a lot of other people. So this is one of the hottest markets going right now, and it's definitely not gonna stop because e-commerce is not gonna stop. So that's another area that I think you're gonna start to see massive growth over the next few years. It's certainly not gonna slow down anytime soon. Another area that a lot of people haven't looked at for a while and still popping up are these cell phone towers. Cell phone towers are real estate, and these cell phone towers are right now the hottest play in the real estate world. Now this article is just 30 days old. What's happening as we're rolling out these 5G networks and self-driving cars, the value of these cell towers are expected to rise. And the way a cell tower works is once you put a cell tower on your property, like we did one in Corpus Christi, Texas, at a self-storage property that we own, you could put Sprint on there, you could put Verizon on there, you could put different carriers on there, and you can all charge them differently. So one cell phone tower can actually have multiple sources of revenue, and they pay you monthly, and it's all part of that massive network that you guys always see on TV. So this is another area I think that is ripe, that you should be looking at. Another one that's not talked about too much right now is manufacturing. And here's what I think is going to happen here. So as you guys know, the US versus China debate, we're seeing that all over the place. Okay, a lot of the manufacturing we've deployed over to China over the years in every single way. And it's been a massive, massive discussion. And so I believe that you're going to start to see low-cost distribution networks and production in things like Mexico and Canada, and the NAFTA agreement, which is a North American Free Trade Agreement, is potentially going to fire up again. And you're going to start to see cars and all kinds of things manufactured in basically North America as we move away from China and some of the overseas things. And so that's going to be another long-term real estate play. You know, the president's talking about it, everybody's talking about this, and we're seeing the results of that right now as the economy got shut off. So those are the 4 winners that I'm going to see. Let's talk about what I'm going to see as the 5 losers, and there's actually probably more than that. But the first one, obviously, is retail. And so, as you guys know, what we're seeing right now is kind of the death of the department store. You know, we're seeing empty malls, canceled orders, risks of bankruptcy, and you guys are seeing all the big boys are all filing right now, or a lot of them are. And certainly, the heartbeat of America, however, is the small business owner. So they're not getting a lot of attention because a lot of the big ones are. But they're the ones that are the most in jeopardy. They're the ones that are having a tough time paying rent because they had to be closed. I do think that you'll probably see retail centers that have large anchored grocery stores in them will probably be okay, but the ones that do not are probably going to struggle a little bit more. So retail is definitely something that you need to be careful of investing on that right now. Hospitality is another one. Don't need to educate you guys on this. It's killing the hospitality industry right now. Then joblessness is definitely coming. So these are hotels. These are people that are traveling. So even when all this is over, there's going to be people that are going to change their behaviors on the way that they travel. And so the hotels are just getting nailed right now. The small hotels, even the luxury hotels, because people are just afraid of going. Many people are going, but many people are still not going. And so this is going to be something that you definitely want to be careful that you're not invested in right now. This is another thing. There's the restaurants that I mentioned here as one of the 5. And, you know, I'm questioning, because I've been going out to dinner here in Scottsdale, Arizona, and what we're seeing 30, 40, 50% occupancy. I went to dinner last night at 5:30, and the dining room was half empty, and it's because they're social distancing. And, so this limiting capacity could be the death sentence for suffering restaurants already, because in a lot of cases, their margins are not that good. When we're seeing them trying to figure out ways to stay open, they're putting tables and chairs outside. But in Phoenix right now, it's over 100 degrees, and it's not necessarily, where you want to be. And so they're figuring things out, and they're trying not to lose their restaurants. But this is going to be a big one, depending on what the state and local government and even the CDC says about restaurants moving forward. So be careful there. The office, now that's an interesting one. I actually put this article here. It's called The Death of the Office. It's an interesting one. We're all kind of wondering, what's going to happen here? And I talked about this in another video. People are they going to really return to work? And some people are asking why they need to congregate at the offices and what's the point anyway? And we're starting to just see this. And so I think you're going to find that as a lot of these leases mature, they're going to downsize. Certainly, there's not going to be a death in the office industry, but it's going to take a major impact. This is going to be 2-3 years out probably. And the last one that's not getting a lot of attention is the senior care, other than the deaths. And I want to show you guys, that about 1/5 of all the U.S. deaths have been linked to nursing facilities of some sort. And as you guys know, you've seen all the stories where people can't go see their loved ones. It's horrible. But this is having a major, major, major impact on those senior facilities. Because if I had my parents in there, I'm probably rethinking about moving them home, okay? So there's a lot of people doing those right now. I have friends that own these. And so the senior facilities are having a rough time. And they're scrambling also to figure out new social distancing kind of designs. I met with a friend of mine the other day, and he's looking at doing a 20 unit with almost house style so that they all have their own place. And so this is going to be very different as opposed to the big nursing homes where you walk in and there's hallways and, common everything. So these are 5 things, guys, I think that you better be careful of. They're definitely losers at the moment for 2020, and who knows how long these are going to last. I mean, we're talking about years, honestly, on these. These are 2, 3, 4, 5, 6 years of adjustments coming back. So be very, very careful as you guys continue to invest your money or other people's money into these 5 categories, because I think they're in for a rough go over the next several years. So let's talk about the ones that I'm not quite clear on yet. And so these are real estate 2020 to be determined. There's a lot of debate on all of these right now. So a lot of you are going to be in the single family space. And so you're going to see economists on one hand say everything's great. You're going to see economists on the other hand say everything's not great. I think you got to be very careful right now. We don't know exactly what is going to happen on the single family space, but we do know that as of right now, the housing market is definitely paused, and there are many reports that home prices are unlikely to move. And so there's a lot of people that are going to debate this. Don't forget, single family housing is directly related to job growth. It's directly related to people being employed and feeling comfortable. People are not going to use their savings, as we went through earlier, to buy a house if they don't have a job. So that's going to be a big factor, and you'll have to see where that comes out. The multifamily space, which is a space that I'm heavily in, we're seeing very good collections, primarily because of the stimulus money. So there's, again, the multifamily tenants got rocked. A lot of them are not working, but a lot of them are getting the stimulus money, and they are paying their rent generally. So that space at the moment is in pretty good shape, but at the end of July, we'll see when that stimulus money runs out, if it gets extended or doesn't get extended, and also when all this goes away. The manufactured housing space, I believe, is probably going to be okay, because as people try to downsize to affordability, you can get into a manufactured home very affordably. But of course, it's going to depend on where it is, what it looks like, how clean it is, how well it's managed, all of those things. And the next one is self-storage. So self-storage just got hammered, as you would imagine, just like everything. But as people get displaced from their homes, from their apartments, as they move out from roommates and social distance, a lot of stuff moves into the storage. We don't know exactly what that's going to look like, but there also potentially could be delinquencies and vacancies in those as a result of going the other way. So that's one of those things that we're not sure of. Medical office is definitely something that is going to be thriving. And for those of you who don't know, these are basically hospitals and offices next to hospitals. Probably many of you have gone to a hospital and then you go to a specialist, and typically they're kind of near there. So I think that that's going to be an area that's going to be really, really good long term once everything kind of gets back to normal. And the last one that I put was student housing. I'm not quite sure what's going to happen with student housing. As we all know, student housing is in big flux right now because only 120 of the universities are actually saying that they're going to start up in the fall. And so there's all these universities that are questioning whether they're even going to open or not. And so from a guy that has 2 kids that are in college, I'm paying the University of Arizona, and they're basically in their bedrooms at my home taking the classes on a Zoom platform. And so the question is that worth it or not? And are they really getting a great education? So I think a lot of people are taking a look at this. And so there's all kinds of theories around this. One theory is that there won't be any roommates because of social distancing. And so that's going to double everything, which is actually good for student housing. Another one is, do I want to send my kid to college, when they're just doing Zoom classes and, they're not getting the full college experience? So this is going to be a big one. This will be one that you need to just keep watching. The interesting thing, guys, is I looked at all this stuff. It's online, it's available, and I did it just for this video, and you can do this too. So if you got a particular category that you're interested, just go deep on it and start taking a look at all the different data and researchers' conflicting opinions on this stuff. It's actually fabulous to hear everybody's different varying points of view. So now let me go into what I think could potentially disrupt everything that I just said. So the one thing that we still don't know, guys, there's more disruption and more uncertainty on 4 main things, and there's probably more than that. The first one is the second wave of COVID. Okay, there's no cure, there's no vaccine. We don't know when that's going to end, and people are still freaking out, and that's definitely going to change their behavior in a lot of ways. It's going to change their behavior on the hospitality, it's going to change their behavior on the restaurants, et cetera, et cetera, et cetera, the senior housing. So we don't know about that, and I think obviously there's a race to try to figure out when we're going to get a vaccine and a cure and all those kinds of things so we can get back to the new normal. But this is a big old question mark right now. The second one is, what's the employment going to be after the emergence, after the lockdown? That's a big one. Now, I did a video on this. Maybe it's 10 million, maybe it's 20 million people still unemployed. We don't know. But I know for sure there's going to be a lot of businesses that don't make it, and there's a lot of layoffs happening right now. Okay, so we know that those people that are saving cash, that are unemployed, are not going to be driving consumer demand like we talked about earlier in the video. The next one is, of course, the stimulus money. Right now, that's the EIDL and the PPP, which is the payroll protection program. We have it in unemployment. We have them in those $1,200 checks that were sent. So all that's happening right now, and it's artificially propping up the economy. We know that. And so the question is, when's that going to end for both the employers and all the people? When? And so that's going to have a massive impact on people's behaviors. If we keep pumping money into the economy, then things will probably bump along okay. But at some point, that's probably got to stop, and people are going to have to go to work, and we're going to have to go back to the new normal. And the other one, of course, is interest rates, which we know cannot go down anymore. Interest rates are all-time lows. This is going to be an interesting one, because if interest rates go up at all, which I can't imagine that they would, then this is all going to slow down even more, because that's what it means. It means that consumer demand gets less when the prices to buy things go up through interest rates. So these are 4 things that could potentially disrupt everything we talked about and really completely change some of the predictions and some of the things that I just talked about. But you got to keep your eye on these. And this is why, guys, that I still believe that you should be very, very careful and do not try to catch a falling knife. I've used this scenario before, but there are certain industries that are falling right now, like retail, like hospitality, like senior housing, even multifamily in some spots. I actually went on a podcast in November of 2019, and I said, you don't want to catch a falling knife, which was interesting. I found that on the internet as I was about ready to wrap up this video, because that's what I was telling people. And this was before the virus. I was like, the market's hot. Things are overpriced. We're having a heck of a time buying, you know, because we own office buildings, self-storage, multifamily. We're doing lot development. We've done single family. We've done all these different things. And we're having a heck of a time deploying capital and buying because there's all this overpaying. So we weren't buying. And so what you want to be careful of here is you don't want to buy too soon. You want all this stuff to roll out naturally. And you want it to roll out to the lenders and the banks and back where it came from, because a lot of equity is going to be wiped out. And this is potentially going to be one of the biggest wealth transfers in the history of the world right now as we're going through this. And you guys can participate in this if you're on the right side of this. And so that's all I'm trying to do, is help educate you guys so you can be on the front side of the things that are doing really well. And be careful of things that do not have a high consumer demand, because those are things that are probably going to continue to go down over a long period of time, and you do not want to catch that falling knife. So thanks again for watching. So if you guys like this video, make sure you hit the thumbs up below the video. If you want more people to see this, I really appreciate it. And if you want more information, more videos from me, go to kenmcelroy.com. In fact, I actually have a Facebook Live that I do every single week that I answer people's questions directly live. So if you're interested, just go to kenmcelroy.com.